Joining us with his take on big tech in the AI arms race is Paul Meeks, independent solutions wealth management portfolio manager and finance professor at the Citadel. I was always blown away by putting 3 words into Google to see what it comes up with. I can't imagine. Isn't that AI, Paul? Isn't that been around for 30 years? We had the creator and founder of Waze, and he said, I sold my AI company 10 years ago to Google. Waze, which was AI. So what happened? How do we cross over into this new era? It was ChatGPT, I think. It was telling it to write something, and people can't believe they might not have to do homework ever again. Is that what got us to where we are?
Yeah, when we really emphasized generative AI back last fall, right, when OpenAI really, as far as commercially, pressed pretty hard on ChatGPT, it caused a new paradigm. But you're absolutely right, Joe. We've been talking about this, and companies have been talking about embedding AI functionality into their whole product suite for years. And so I really liked the interview yesterday that you did with Andy Jassy. And I will tell you, I completely agree with what he says. You know, we're in a hype cycle, and all of the tech majors, including Amazon, will get to the substance before too long. Tech companies will distinguish themselves not by having AI, that'll be everybody's oxygen, by the companies that actually don't jump on this bandwagon. Again, a lot of hype. It reminds me very much in the late 90s and early 2000s about all kinds of companies, technology or not, claiming that they were .coms. And then, you know, what happened was, yeah, the internet became a really big deal. It changed everything. But a couple companies really exploited it, and a bunch of companies that claimed that they were .coms back then are no longer in existence today. I see the same kind of fallout over time with AI.
I mean, considering, you know, you can take your phone and put something in motion that really spans the entire country to an Amazon warehouse, to a logistics center, to a plane which goes to an electric truck which comes to your door in a day. That's all AI. So what really is the difference that what we're talking about, that Andy Jassy is talking about implementing from here on out? It seems like they run on AI already, Amazon.
I think the key from yesterday's interview that you guys did is right now NVIDIA is getting all the love and probably deserves it for their AI enabling chips. However, if Amazon is right and they have these 2 chips that they can bring to bear in AI, not only for them, but maybe potentially for other partners that are cheaper yet faster, that is the major takeaway, the major potential positive from your interview yesterday with the CEO of Amazon.
All right, we got a Fed meeting today. You like tech, but you thought maybe it's time for at least a look around to see whether you make additional or add to positions. I think that might have been a good call given what we saw with the ADP report. Are you still somewhat less enamored of doing something right now?
Yeah, particularly I don't want to chase the AI names. I've taken a deep dive into the tech majors. There's 8 essentially mega tech companies, and probably the only 2 that I think are reasonable valuations, Joe, are Meta and Google. And I probably prefer Meta for a lot of reasons, not only the threat over at Twitter, but I'd like to see what these companies say in their next quarterly results. Remember, that's going to be coming fast and furious in about 2 or 3 weeks' time, because last quarter, they talked about AI as hype, AI as marketing spin. This quarter, when they give their guidance for the next period, are they actually going to talk about AI impacting today or impacting anytime soon their revenue, their cash flow, their earnings? I think a lot of companies will not be able to confirm that. And so, yeah, I'm a little bit hesitant.
Paul, real quickly, though, Threads, you think is a real threat just in terms of advertising dollars it can take away from Twitter?
I think over time, they definitely are going to be a threat. In the near term, the scary thing isn't really what Meta can do to drive revenues. If Meta today was to take all of Twitter's revenues, which was about $5 billion before Musk bought the company, it's only going to add 4% to Meta's revenue base. So over time, maybe yes. In the near term, it could be potentially devastating for Twitter. In the long term, once Meta starts to monetize, yes, it could be a big deal. I don't expect them to monetize it for some time, though.